Today we are going to spend some time uh, talking about a subject that for a lot of people, it can create confusion and it can create, um, you know, uh, some frustration, to be quite honest with you, especially from customers. Um, and and where we are going to start this discussion is with the fact that Pennie right now is promoting the financial assistance that's available through the American Rescue Plan. We are doing everything that we can possibly to make sure that not only our broker partners, our assister partners, our community partners are aware of what these savings mean to people. Uh, but generally, where it all begins is it begins with a discussion of income and what it means to address income with a customer. So the first thing that I'd like to focus on is a common question. And that question is what to include in income. Now, when you think about income and the income that's entered on either the comparison shopping tool or in, the application process, your eligibility for financial assistance, as we see here, through Pennie, is based on your expected household income for the year you want coverage, not last year's income. Immediately that sends a chill down someone's spine because what do you mean I have to estimate my income? I have to, all of a sudden be able to, harness the powers of the cosmos and be able to tell the future. I don't know what the future is going to hold. Nobody does. And to be quite honest with you, the seasoned assisters and community advocates, in Pennie's network, they're very well seasoned and nuanced in being able to help someone navigate this process. But for just general customers or individuals that individuals that might be brand new to the concept, the idea of working through that income, it's something we're going to hit a few topics on just to make sure that folks are clear. But right now, what we are going to focus on is what to include in your income calculation. Well, one of the first things that it mentions here is for most people, the household uh, is the tax filer, their spouse or partner, and any taxes that their dependents would have, including those who are not applying for health insurance. That is all included in the household income. Now, there are as diverse an array of who to include in this. Um, but the key principle is to keep in mind it's anyone who's under the roof, who is part of that family unit. And here's the important thing, who is listed on the taxes. Okay, so if that's if those are spouses, fantastic. If it's spouses and dependents, fantastic. It's whoever is listed within that within that tax return. And what is counted? Basically, this is, again, another area that we're going to talk about today because it's not just the adjusted gross income that is important, it's the modified adjusted gross income that comes into play with regard to financial assistance. So with that being said, the first thing that I would like to sort of cover is the types of income that are included in these estimates, because quite honestly, we get questions all the time related to, well, does this count, or what should I count in income? Here's a really, really simple way to look at it, and that is the first topic here is federal taxable wages. Those income sources that you list on your federal income taxes, and those include tips. Self-employment income is also something that your reported self-employment income is something you want to make sure that you list. Unemployment compensation. Unemployment compensation is different than workers' compensation. Unemployment compensation is taxable. Workers' compensation is insurance, so that's different. And we'll get to that here in a minute, but unemployment compensation is something that is taxable, so it's something that you would want to include in those calculations. And because of COVID-19, we know of a lot of individuals who are currently workers in transition. They will have regular federal taxable wages, but then they'll also have that unemployment thrown into the mix. Many people will. Coming out of 2020 was a rough year on all of us. So that's something to consider. Social Security. Social Security, both taxable and non-taxable. Social Security is something you should include. Enter the full amount before any deductions. Now, here's something that they also point out is Social Security disability income, but don't include, and it stresses this here, don't include SSI, which is supplemental security income, retirement or pension income, alimony, and they give a date range here. Okay. And this is, again, if, you have a divorce or separation finalized before January 1 of 2019, include the income. Now that we're, past that, divorces and separations finalized on or after January 1 of 2019, don't include the income. Child support. Child support, you don't have to include child support. Capital gains, yes. Investment income, yes. Rental and royalty income, of course, it's an income source. Excluded untaxed foreign income, yes. A gift. My uncle just gave me $2,000. Do I have to, include that? No, it was a gift. It's taxable income through your earnings. And again, here we come with the supplemental security income. You don't have to include that. It's not expected. Veterans disability payments, absolutely not. Again, workers' compensation, it's not unemployment compensation. Workers' compensation is insurance. It's different. It's untaxable. Or I should say it's not taxable. Proceeds from loans, student loans, home equity, etc. No. No excess is you don't need to worry about that. So that covers predominantly the information that we want to include in a determination of income. The next is interesting for the times in now in which we now live, which we're looking at economic stimulus payments. There was a lot of questions from folks. Do I need to include, my economic stimulus payments in income? And as we see here, absolutely, you do not need to include either the one-time economic stimulus payment in your income or the two subsequent ones that we've had. Now, in terms of unemployment compensation, again, with regard to the COVID-19 enrollment period, you do need to include all unemployment compensation you may be receiving, including regular unemployment compensation from the Commonwealth and federal unemployment benefits when reporting income to Pennie. And this includes pandemic unemployment assistance and pandemic unemployment compensation. So there are two very important points there. Now, we go back to this notion of adjusted gross income. The first thing that I always make people aware of is that, my approach to, wanting to help provide people with tools that they can actually use. I like the fact that we've got this information included at pennie.com for resources and public resources. There are a lot of people, myself included. I'm not a tax professional. I do prepare my own taxes, but if it weren't for the software that I use, I would be an absolute basket case. I wouldn't know how to approach that. But a gross adjusted income is the total income of the income for the tax year minus certain adjustments you're allotted to take. And that's important. We'll talk about that again later as well. Adjustments include deductions for conventional IRA contributions, student loan interest, which a lot of us have, and more. Adjusted gross income appears on, and this is an important thing to keep in mind, what matters in terms of, you know, for most people. I'm not talking about the incredibly complicated. I'm talking about for most people, what matters is line 7 on their 1040. That at the end of the day is, especially when you talk about the modified adjusted gross income, that's the starting point that most people can take in terms of, estimating what their plan year is going to look like. And to report your expected income on your Pennie health insurance application, you can start with your most recent year's adjusted gross income and update it based upon income and household changes you expect for the year in which you're applying for coverage. And that's where the eligibility for financial assistance starts. So that's actually a good starting point. Just remember line 7. If somebody comes in line 7 on their 1040, that is a good starting point. Now, the modified adjusted gross income is again, it's where you sort of project what as a customer, as someone who assists customers, it's where you would project conservatively project where where that individual's income may change. Now, we all know that because of, again, because of 2020, because of COVID-19, even into 2021, there are considerable changing economic conditions throughout the Commonwealth of Pennsylvania. There are individuals who have closed their businesses. There are individuals who are between jobs, who may be in a position where their income has taken a dramatic hit. Um, this is where the modified adjusted gross income comes into play. But again, I mentioned before that in the vast majority of cases, um, you'll have a conservative approach to this that will help somebody not find themselves in a position where they're overestimated or they're underestimated. They're in the ballpark, unless there have been significant financial changes. And that's something, again, we're going to take a look here in a minute. But the modified adjusted gross income is the figure that you use to determine eligibility for premium tax credits and cost sharing reductions to lower the cost of coverage and care through Pennie. In addition, Pennie uses this figure as part of its assessment for individual and household eligibility for Medicaid and CHIP. The modified adjusted gross income, if applicable, it can also include untaxed foreign income, non-taxable Social Security benefits, and tax-exempt interest. It says here, note that for many people, the MAGI is identical or very close to their adjusted gross income. MAGI does not include SSI, and it does not appear as a line on your tax return. So it truly is an estimate. Now that brings us to the question: how should we estimate income? Um, I think going back to the first point that was mentioned here is that for many people, that estimate is identical or very close to their adjusted gross income. It's a starting point. Um, when you fill out a health insurance application with Pennie, you'll receive an estimate, or you'll need to estimate your expected income for the next coverage year. And this is what they say you need to know. Your ability to qualify for financial assistance to lower the cost of coverage and care is based on what your expected household income is for the year you're seeking coverage, not last year's income. Okay. The income is counted for you, for your spouse or partner, and everyone you'll claim as a tax dependent on your federal tax return. Remember line 7. You must include their income even if they don't need health coverage. That goes back to even on the cost estimator, it asks who the members of the household are, what the income levels are, and who is seeking coverage. That's all something that even through the comparison shopping tool, and most definitely through the application, that's something that we can make sure is, covered. Now, it says start with the household's adjusted gross income. Well, there's your starting point, line 7. Again, line 7 is an important thing. From your most recent federal income tax return. And they even point out you'll find your AGI on line 7. Add the following kinds of income. Do you have any foreign income? Tax exempt. Do you have any tax exempt Social Security benefits? Tax exempt interest. Don't include, and they remind you again, don't include SSI in this calculation. Adjust your estimate for any changes that you expect. And this is where things get complex, especially for brokers, assisters, for customers who are self-serving. This is where it gets very, very complicated for some folks, and that's because again, this is an estimate. Not everyone in the world is comfortable with estimating. That's why I say a conservative starting point, which is that line 7, that AGI, is something that at least for the time being will be stable for most folks in terms of putting them on even keel moving forward in not only determining their level of APTC and CSR, but also putting them in a position where they're not you know uh, under or over in terms of in terms of what they're estimating. And they mention here that you need to consider the following factors. Any expected raise. Again, depending upon where you work, some folks, I've worked places where I didn't see a raise for many years, and I've worked other places where there were raises quite frequently. So depending upon where you work, if there's not, if there's a consistent level of bonuses or incentive payments, etc., that you think you can achieve, yeah, that's something you want to include. Otherwise, don't include it. It's that easy. Um, you look at new jobs, there are going to be a lot of individuals who are going to be changing positions, especially in 2021. There are a lot of organizations who are looking for new staff. They're looking for new talent. And there are a lot of displaced workers right now. So, do you think you might take a step up? If not, let's stay within that range that you were in. In some cases, and it breaks my heart, but in some cases, people will actually take a step down. They might take 2 or 3 part-time positions to equate something sustainable for them and their family. We need to work with them on that as well, and that's where this comes in. Changes to income from other sources like Social Security or investments, and changes in household like gaining or losing dependents. That can be a huge one. So here at the bottom again, it says make sure that you update your Pennie application within 30 days of any change of income. And that brings us to, the notion of changing income. And a change in income is a qualifying life event. Right now, we're under the COVID-19 enrollment period, but I guess you could say in a parallel universe at this point, we would have the ability of having qualifying life events, and we still do have qualifying life events that people can take advantage of with regard to, changing their status and adjusting their income. And when you have a significant change in income, that is one of those qualifying life events. And it says here, your life might change over the coming year. For example, you could get married, have a child. You might have a change in income. If you do, um, it's important that you be able to change your application, and you can report that change within 30 days of the event, so you continue to receive the correct amount of financial assistance to help pay for your coverage and care. And that's, again, that's very important. Changes may affect your eligibility for financial assistance, cost sharing reductions, and coverage through Medicaid or Medicaid or CHIP. So an important thing to keep in mind as well is that if there's a change in income under the American Rescue Plan, what if my income changes while the American Rescue Plan is in effect? This is, again, as of March 11th, your your monthly premium is based upon your income. And if the income goes down, you may qualify for lower monthly premiums. If your income goes up, your monthly premium may go up, but you will not pay more than the 8.5% of your annual income on health insurance premiums. And for a lot of individuals, especially those who, for a single person who makes more than 51,000 a year, for a family of four that makes more than 105,000 a year, for a lot of people who would be over that subsidy cliff. Now that that subsidy cliff is gone, they'll be in a position where they'll have some assistance paying for their insurance. Now, another thing that is tied to income that I want to hit upon are the documents that you can use to confirm household income. And I'll go over this very quickly, but if it's income from a job, you can use pay stubs. You can use, of course, a 1040, wages and tax statements. You can use a signed earnings statement from an employer. In terms of self-employment, and again, this is important, there are a lot of individuals that, because of COVID-19, are saying, you know what, I have had it with working with other companies and people, I'm going to go out and hang my own shingle. For the self-employed, a ledger document, 1040 SE, 1060, a tax return that they have already prepared, bookkeeping records, receipts. These are all different supporting documents that they can use should they need to verify their income. With Social Security or retirement benefits, an award letter or certificate, annual benefits statement. And then again, with PA unemployment benefits, you're looking at an award letter or certificate, monthly benefits statement, a copy of the PA Direct card with the statement, a letter from the PA Department of Labor with reason for denial. And retail income, or I'm sorry, rental income, you can have rent checks, current lease, signed letter from a tenant, etc. So those are documents that you can use to help sort of reinforce what income is. I mentioned self-employment, and self-employment is something that is incredibly significant. Um, uh, Individuals, if Pennie is here to help, we are here to help with individuals who are not only in the individual market or who don't have access to employer sponsored coverage, but we're here to help small business owners, sole proprietors, small precision manufacturers. And again, if they are self-employed, they're able to report that income, and they can do it by way of any of the documents that were previously mentioned. Um, with that being said, we have a few moments left. I just wanted to sort of close out by letting everyone know that we have updated Pennie.com yet again. There are new resources available at our homepage. In addition to that, you'll see new events that are popped up. You'll also see that we've made it very easy for people to connect with assisters and brokers. Um, if there are any questions, please feel free to ask.
Hey Scott, this is Katie. I don't see any questions in the chat. I did want to
Okay.
say that I had not seen these updates on our site, and they look fantastic.
Yeah, well, I will say, Katie, there's been a lot of work. There's been a lot of work from our marketing and communications team in creating a website that's just from the homepage itself provides people with direct and accurate information, not only about the COVID-19 enrollment period, but also about any key dates and deadlines, any events and resources that we have available. They're typically something that you can access right here from the homepage. Another thing that I want to make sure that everybody is still aware of is the fact that we have 5 languages that you can access through Pennie.com: Spanish, Mandarin, Russian, Arabic, and Central Khmer. Um, these are hands down. These are hands down resources that anyone can utilize. And again, the assister resources and our community partners resources pages are available. Here at the bottom, we have materials not only to help market, and these are being updated as we speak. We also have user manuals and guides that are available. And like I said, that being said, we're trying our very best to make sure that through the COVID-19 enrollment period and into open enrollment 2022, that everyone has what they need to do their job well. And that in my world, that is centered around making sure that assisters and brokers and community partners have what they need to um, get people to a better place, because in the end, that's why we do what we do. So with that being said, I'd like to thank everyone for taking time out of their schedule to be with us today. And I hope that everyone has a peaceful week.